Revaluing the gold. I think that's a good idea, but it serves no purpose. If you revalue the gold, it makes the balance sheet look better, but in actuality, it isn't. There's $36 trillion in on-balance sheet liabilities, about $30 trillion net. If you revalue the gold, does the debt go away? No, because who can foreclose? The fact that we have $36 trillion in on-balance sheet liabilities and $100 trillion in the net present value of off-balance sheet liabilities. Little, inconsequential things. When people quote the national debt, they quote that $36 trillion number, which is the small one. And revaluing the gold doesn't change any of that because no creditor and no pensioner has access to it.
RickRule of Rule Investment Media has raised concerns about the integrity of the gold reserves at Fort Knox, questioning whether the gold is physically present and whether it has been hypothecated or encumbered. He argues that a full audit would be neither technologically challenging nor prohibitively expensive, noting that firms like Sprott have been conducting similar audits for years. External inspections of Fort Knox have been infrequent, with the last occurring in 2017 when Treasury Secretary Steve Mnuchin and others toured the vaults. While they were photographed handling what appeared to be genuine gold, the visit was largely symbolic and not a comprehensive audit. The previous outside inspection was in 1974. Despite regular internal inspections by the U.S. Treasury and Federal Reserve, no thorough analysis of the gold reserves has occurred in over 70 years, leading to increasing skepticism. Some experts suggest the U.S. government could leverage its vast real estate holdings, including federal land and vacant office buildings, to address financial challenges. Privatizing or better utilizing these assets could generate revenue, but gold continues to play a key role in discussions about debt reduction. Financial experts like Jim Rickards propose that a significant surge in gold prices could substantially offset the national debt. Estimates suggest that every $4,000 increase in gold's price could eliminate approximately $1 trillion in debt. Some projections anticipate gold reaching $10,000 per ounce, while others speculate that prices could climb as high as $24,000 per ounce. Such a revaluation could offer an unconventional but potentially effective means of alleviating national debt without the political hurdles of legislative action. Rule remains skeptical about the impact of gold revaluation, arguing that it may superficially improve the government's balance sheet but doesn't address excessive liabilities. With the U.S. carrying $36 trillion in on-balance sheet debt and over $100 trillion in off-balance sheet obligations like Social Security and Medicare, the issue of fiscal sustainability persists. Additionally, since creditors and pensioners cannot directly access gold, its revaluation is more symbolic than a practical solution to the debt crisis. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think we should have an honest audit of Fort Knox. That gold belongs to Americans. There are serious reservations about whether or not it's there, and if it's there, whether or not it's hypothecated, whether or not it's owed. At Sprott, we had a lot of gold audits. The technology exists to do that. It's not really complicated. 1 bar, 2 bar, 3 bar, sample the odd bar. It's not expensive either. And I think we need to call the question. The more the question isn't called, the greater the destruction in confidence around the political economy in the U.S. I think that the government owes it to the American people to say this gold has been there for the last 50 years, but since there's a popular demand for an audit, we should audit it. Now, the Defense Department has failed their audits. There's been a lot of failed government audits. This one's a little simpler. You count bars and assay them. As I say, Sprott has been doing this for what, 15 years? We'd be happy, I suspect. I shouldn't say we because I no longer work there anymore, but I suspect Whitney George would be happy to provide the technology for an audit for free to the U.S. government. Now, revaluing the gold. I think that's a good idea, but it serves no purpose. If you revalue the gold, it makes the balance sheet look better, but in actuality, it isn't. There's $36 trillion in on-balance sheet liabilities, about $30 trillion net. If you revalue the gold, does the debt go away? No. Does it help you access more debt? No, because who can foreclose? The U.S. government owes me, let's say, if I buy some treasuries, the equivalent of 1,000 ounces of gold. So I'm going to pull up an armored truck to Fort Knox and demand payment when the counterparty has an army and nuclear weapons if I get nasty? I don't reckon. It's all theater. The issue isn't the value of the gold. The issue is the fact that we have $36 trillion in on-balance sheet liabilities and $100 trillion in the net present value of off-balance sheet liabilities. Little inconsequential things like Medicare, Medicaid, Social Security, military pensions, government pensions. When people quote the national debt, they quote that $36 trillion number, which is the small one. And revaluing the gold doesn't change any of that because no creditor and no pensioner has access to it.
RickRule remains bullish on gold, not just based on company valuations, but also due to broader macroeconomic factors, particularly the rising U.S. debt and deficits. He views inflation as the only politically viable solution for managing America's growing financial obligations, a historically favorable scenario for gold. The metal's performance reflects these underlying concerns, with prices maintaining upward momentum. On Wednesday, gold triggered a breakout above a lower swing high at $2,930, surpassing the 78.6% retracement level, where it had been stalled for nearly a week. Spot gold remained within a familiar range for the first half of the trading session, finding support near $2,900 while facing resistance around $2,930. The weakening U.S. dollar provided a tailwind, helping to sustain gold's strength, though it was not enough to significantly boost demand. Market sentiment took a turn after Wall Street opened positively but quickly slipped into negative territory following the release of softer-than-expected U.S. inflation data. The Consumer Price Index for February rose by 0.2% month-over-month, with the annual figure coming in at 2.8%, while yearly core inflation stood at 3.1%. All readings came in below expectations, reinforcing concerns that inflation may persist longer than anticipated. Let's get back to the interview.
Well, I need to say I'm beginning to go down cap, partly because 2, 3, 4 years ago, I filled my boots in the large cap. And frankly, they've done pretty well. Even the laggards like Newmont are up sort of 40%. But the real performers, the Wheaton Precious, the Agnico Eagle, the Lundin Golds, the Alamos, the people that performed, and mercifully I had the good fortune to identify those reasonably well, have done extremely well. And I don't think that they are aggressively priced. Agnico Eagle, as an example, now the world's most valuable gold company. If you look at the cash flow multiple and you look at the balance sheet and you look at the product pipeline, I would say it's fairly valued, but not overvalued. And I think you get any increase in the gold price absolutely positively for free. For free seems like a pretty good deal to me. Now, we are beginning to see fairly significant valuation gaps between large multi-asset producers and the smaller companies. Traditionally, this delta gets filled in either because the smaller companies increase in value or because the big companies take over the small companies. The recent takeover of Caliber by Equinox goes right straight to this. Larger companies have more trading liquidity. As a consequence, they have higher market caps and lower cost of capital. They get passive index buying. So there's a natural bias towards larger companies. If you do enough work so that you can identify the better targets, one of two good things happen. Either those company share prices go up or they get taken over. It's like the old Purelator auto filter commercial. You can pay me now or you can pay me later, which is a good circumstance. I also believe, as a consequence in particular of U.S. government debt and deficits, that the gold price goes higher. I see the only way that we have of getting out from under our debt and our off-balance sheet obligations. I see the only political outcome as honoring the nominal value of those obligations, but inflating away the net present value. We did this, Jesse, before you were born, probably, in the 1970s. According to the Congressional Budget Office, the U.S. dollar lost 75% of its purchasing power between 1970 and 1980. Not coincidentally, the gold price went from $35 an ounce to $850 an ounce. So at the same time that I think the big gold companies are reasonably priced and some of the smaller ones are cheap, I think the denominator goes up, which is to say, I think the gold price goes up too.
The debate over gold's role in addressing economic challenges continues, with questions surrounding U.S. reserves and the potential for revaluation sparking fresh discussions. While gold remains a hedge against rising debt and inflation, its impact on long-term fiscal sustainability is still uncertain. With mounting financial obligations and shifting market dynamics, the actual value of gold in economic policy remains a subject of intense scrutiny. Could a formal audit of U.S. gold reserves restore confidence in the financial system, or would it raise more questions than answers? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.